Hi guys, Harry Yotis here. I've been trading professionally for 20 years now. Started my career in 2005 and still alive in 2026. So here we are. Tuesday, this candle right here on a chart at the S&P 500. Volatile. We went all the way down to 675, touched this resistance at 685 and then settled at close to 682-ish, 682.5. So it's an up day. So the market started off well on Tuesday, the 17th of February. But basically we're stuck in this sideways mode and we're having a continuation of the AI disruption trade. Okay, that's the big news of the day, AI disruption. Plus, don't forget, we're in the middle of the OpEx week. Friday is options expiry for February. Okay, so before we get started, let's talk about the technical picture. Let's bring in the moving averages. We are trading below the 50. So we said before that we are in neutral territory because we are underneath the 50. Yeah, we hit the 100 and rebounded, but you draw enough lines on the chart, the price will hit a line eventually. Okay, so let's just take this out for now and say that because of this up and down choppiness for months, okay, which was, brought into effect by last Thursday, because if it wasn't for this big candle down here, it would be very, very positive, upward sloping, okay? But because of this downward big red Thursday candle and Friday, we're still stuck in sideways mode. So we are neutral in terms of the technical analysis, and we will get bullish because we keep going up and down. Like if we bring in the moving averages again, we keep going up and down, reclaiming, losing the 50-day moving average in red. So before we get chopped around, I'm sure a lot of CTA firms are getting chopped around by going short, going long, going short because they're mechanical traders. We're gonna suspend our bullishness until we go to new highs. So if we keep trading around these levels, we're going to stay neutral. And if we go above, we're going to be bullish, okay? I was hoping we would go down all the way to this support level of 673.50. Maybe this was a retest, I don't know. But maybe we can keep going in the days ahead and touch it, undercut it before going up, okay? Why do I say that? Because, well, right now I'm just riding my positions that I have and I'm looking to buy more. Okay, and I would if it gets to a point that it's extreme enough. What do I mean by that? Well, because the technicals are always paired with the sentiment, and here the sentiment smack in the middle of fear. See, what I meant was that if we get down to these levels here, we will probably get into the extreme fear territory, which to me is not justified given what is going on in the market. We have the momentum is at extreme fear. We still have strength and breadth looking good, but every other sub-indices is at extreme fear or fear. Even the put-call ratio. So a lot of puts still being bought. It's still very elevated. And you can tell because if you look at the VIX here, okay, we went all the way up today to like 22, 23. Okay, so this is like, VIX is still fairly elevated. Okay, so the options prices are going to be pretty much expensive at this point. And in options expiry, they want to destroy that. Okay, they want to kill because they want to kill premium. A lot of these, it all ties in together. Because of this options expiry, I suspect we have like a sideways move, and because we are at fearful levels, we have plenty of room to go higher, okay, and chop around into the neutral and greed territory going forward for the next 3 days up until Friday the 20th. After that, we don't know, okay? So because of the sentiment is still very, very fearful, and we're close to highs, and it's all brought about because of the AI disruption, the Mag 7 getting hit, which we'll get to. We are still at fear. And this is what I like to see, okay? Because I want to accumulate. At this point, though, I am not. Okay, I haven't bought anything. I'm just riding with what I have. We are in neutral mode, okay? You should be fairly balanced in your portfolio, okay? So, given that fact, I will say that we are neutral neutral in the technical analysis, technical picture. But sentiment, to me, this is bullish. It could get more extreme. Okay, because sentiment is a contrarian indicator. Okay, so let's get to the big news of the AI disruption, and of course OpEx. We talk about OpEx first; it'll be quicker. I think that we chop around. Okay, we chop around and we destroy this VIX right here. VIX needs to go down for the market makers to make money on Friday. Okay, and that means key levels come into play. So OpEx, we are looking at Nothing clearing. A lot of puts were bought here. So I suspect we finish above these levels, above the 675 level on SPY, and we don't get to the highs. So we have 675 to 700-ish. This is the range I expected to fall in, and around here. Maybe 685 to 690 would be ideal to destroy all the put buyers and the guys who are buying calls here during these months. Lead end of January, beginning of February. Okay, a lot of short-term call option buyers and a lot of short-term put option buyers that need to be destroyed. Okay, so the AI disruption, what is that? Well, today the big news was, like, if you look at CNBC, it's like Amazon snaps the 9-day losing streak during which it lost 450. Okay, so you have stocks like that are being disrupted by AI, or they're spending a lot of money on capex on AI, and they're getting hurt. Okay, so Amazon, one of them, Mag 7. Okay, you can see crushed. It's up today. So the news here is, snaps 9-day losing streak, but still look, that's the green candle right here on Tuesday, the 17th of February. But look, it's hovering at highs sideways, broke down here after earnings, but it's basically still hovering at these levels. And you can tell for all of them, Microsoft, big loser, big hit, double top all the way down. The only good one, relatively good one, is Google, but it too took a hit and is down at 302. Okay, so you have these Mag 7 stocks. But remember, like, the big disruptors of AI were the SaaS stocks. Okay, so the SaaS stocks like Salesforce, I would use that as a poster child. Destruction, still not going strong, getting killed. Okay, I will draw a delineation between AI disruption sectors, i.e. sectors that are being destroyed by AI. There are some that deserve to be destroyed, like these guys, software as a service companies, SaaS. They deserve to be killed because AI can do their whole business model for way cheaper. ServiceNow getting smoked as well. Look for these at any pop-up, to support a resistance, like ServiceNow, any pop-up in the 140, 150 area, short it. Okay, if you should have some shorts in your account, this would be one of them. Okay, so, but the other sector that was supposed to be disrupted by AI is the logistics sector. Okay, we could look at XPO here. Look at that. I had a small short, and look this day on Thursday, the big red candle on Thursday looked good, but I expect to lose money on this short. Okay, I just thought it was overextended, maybe not. So look at this Old Dominion freight lines. Okay, they're back. Okay, it's still looking. This upstreak is still being held. Higher highs, higher lows. Okay, so the difference between the AI disrupting narrative is that there are some sectors that deserve to be killed, disrupted, which is SaaS, and this sector, this logistics sector, I do not think deserves to be killed. Okay, so you have to understand where the AI disruption is happening and where it is not. Okay, so concentrate your efforts if you want to go short on the SaaS stocks for AI disruption. Okay, so we're still looking at some other sectors here. Let's keep up to date with the Bitcoin. We haven't looked at that in a while. Still below the key $73,000 level, going back to end of 2024 here. It's going to serve as a lot of resistance. Okay, still hovering below it. The bears are still in charge, even though the sentiment is massively, extremely negative on the sector. That's why I expect a bump up to the 85-90 level. Okay, this is what I'm hoping, and if I do, I'm going to get out. I have some small positions on it, and I intend to get out on this move. I bought some Mara when it broke here, right at the 73K resistance on Bitcoin. Okay, we'll see what happens. Okay, it's not an A+ trade or even a B+ trade. Okay, I'll call it a C+ trade at this point, only because it's so beat down and sentiment is so negative. Okay, so that's why I think Bitcoin has a rebound. And gold and silver, let's finish off with that. Gold sold off today. I should mention that gold and silver, I expect them to be slightly weak. Not too much. We'll see. I don't really have an expectation, but the narrative is that they should get destroyed or, sold off during the Chinese Lunar New Year, which is for the next 2 weeks. Okay, so the next 2 weeks, the big buyer is China, and China being off means gold and silver will probably get hit. This is gold. This is silver, hovering at lows, trying to find a bottom. Okay, and if you guys want, I made a couple of videos on one of my favorite gold plays that I played for a while. I'm trying to enter it now, okay, because I believe that it's Hycroft Mining, HYMC. I'm trying to enter it here for a longer term options play. Check out the videos. I have part 1 and part 2 on HYMC, Hycroft Mining Corporation, in my other videos section, general videos. So check that out. So for me, gold going forward, I am still waiting for a consolidation period, and I will probably look to buy after the Chinese New Year. After the Chinese New Year is ending, maybe at the end of August, I'll be looking to probably enter. The volatility should have gone down then. Okay, so that's it. Let's reiterate. SPY neutral. Technically speaking, we are neutral. I think it will continue to go higher, but technically speaking, we're neutral, and we're expecting this chop to wear off during OPEX week. It's probably going to chop around here, so I don't see a big move this week. Maybe going into March and April, we might see that kind of pop going higher, but so far neutral, and we have to stick to it. The sentiment is in our favor, although not extremely so. Still fearful, so we could drop even more. I would love it, because then I would be way more confident in going long, especially if it tests this level, undercuts it a bit, and goes up. That would be beautiful. Okay, that would be like churning, working off these negative sentiment before going up. That would be beautiful. Okay, and we also had the AI disruption. We have the Mag 7 stocks like Amazon taking a hit. I don't think they outperform going forward, although they might pop because they're getting to the extreme negative territory here. Microsoft, not so much. Maybe a pop. Okay, you can play it for a pop right at the support here. Might be good for a pop. Okay? So look for a small pop over these extreme levels, because I do think we go higher after, and we are sort of at the extreme of the Mag 7. And the AI disruption sectors like SaaS, look for shorts here. Don't play the pops. Don't play a pop, like go long for the small term pop. Wait for a technical level to go short on CRM or ServiceNow. Those are the two that I would target for a short, because the profit potential is better and you're going with the trend. Okay, so you wait for the pop. I don't like shorting it as it's going down. I wait for a pop. Okay, and sectors that you should not short because of the AI disruption are the logistics. XPO very strong, Old Dominion, Freight Line doing very well, uptrend. Even though it's still down, generally speaking, this recent move is on an uptrend. Okay, this recent move is up. So Bitcoin, that was the next one. Waiting for a pop, just because it's supremely, extremely fearful and negative sentiment out there. And gold and silver, we are close to buying. The consolidation might be close to ending in the next couple of weeks to a month, which is perfect. We have a sideways consolidation that alleviated all the overbought conditions in the RSI and everything, even with silver. Okay, silver is also the RSI is also neutral, worked off a lot of overbought conditions, and we will be looking to enter this space within the next 2 to, let's say, 4 weeks. Okay, and of course, Hycroft Mining, check out my analysis. If you want to dip your toes into this sector, this might be a play to get, to start getting your toes wet in the precious metals space. So, guys, if you like what you saw, of course, like and subscribe and comment below. I will always answer it. And of course, if you want, put the notification bell. I come up with a video every day, but sometimes a little bit more. And looking forward to OPEX. I suspect we hover around the 685 to 690 level going forward. Let's see what happens. Later, guys.